In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple's most important day of the year is upon us. What we can look for and why Warren Buffett is still betting big on the iPhone giant. Plus, Elon Musk, Peter Thiel, Reid Hoffman, Keith Rabois, just a few members of the so-called PayPal mafia who've now gone on to help define tech and investing. We'll speak with Keith Rabois ahead. And as Amazon searches for its second headquarters, we take a look at the impact on the place it's called home for years. Has Seattle really benefited from the tech giant? First to our top story, Apple has finally set September 12th as its most important day of the year. The world's most valuable public company will unveil the next generation of iPhones. Apple plans to announce 3 new models that include the iPhone X, including a refresh to the flagship device, a larger premium model, and a larger, cheaper model that comes in different colors. Even Warren Buffett is building up his stake in the company by just a little since his last regulatory filing, he said Thursday in an interview with CNBC. Buffett even says that the iPhone is, quote, enormously underpriced. For more, I want to bring in our Bloomberg Tech editor, Alistair Barr. So, is the iPhone X really underpriced?
Well, I've actually had a debate about that earlier this year. If you buy a laptop for $1,000 and you use it at home, you use it a lot less than a smartphone. So maybe a smartphone should be worth more than $1,000. We use it every 5 minutes, not every other day.
So what do you make of Buffett's endorsement here? Resounding endorsement.
I think the point is very valuable, which is that we use these devices. Maybe I have an Android, but you have an iPhone. So we use these devices so often, and basically that they've become indispensable. How valuable is that? There's certainly an argument to be made that it's underpriced from that point of view, for sure.
Meantime, Apple has set the date for the iPhone event, September 12th, at the Steve Jobs Theater in Cupertino. What do we know about it?
They said gather round. They always use a phrase to suggest something. At the moment, we just think that refers to the shape of the new Apple campus, the shape of the new theater. Could there be a round device? Not that we know of yet. There's probably going to be an Apple Watch, which is going to have a bigger screen that's going to be announced, and then these 3 phones that have pretty big screens, a lot bigger than in the past.
The home button is round.
Yep, and that's going away.
Indeed, on these new devices. So tell us about these 3 new phones that we expect. I know Mark Gurman has been reporting extensively on what he knows about the colors, the features, and what this means for the new family of iPhones.
I suppose the main takeaway is that the iPhone X from last year, which was a very solid seller, maybe not quite as amazing as was expected at this time last year. Apple is really doubling down on this. There's basically going to be 3 versions of that core design, and the price range is going to be very wide. There's going to be a really big one that's probably going to be more expensive than last year's one, and there's going to be this cheaper one which is going to look very similar, so you can have a flashy iPhone X, but you're not going to pay as much.
Meantime, how do we expect the market to view this? This is Apple has, surpassed that $1 trillion market cap. Now Amazon is coming very close, but the market is saturating. We see the growth starting to plateau, despite what Warren Buffett says.
Yeah, I think the Wall Street's concern about that hit Apple stock maybe a year and a half ago, 2 years ago, I would say, and now I think the stock has recovered because investors are confident that Apple has a new strategy to deal with that. So they're not trying to get millions and millions of new iPhone customers every quarter or with every launch. What they're trying to do is take all the many iPhone users that are out there and make sure they upgrade to the new version. They're going to spend more money, and then while they have all this massive installed base, they're going to start providing services and making money through that installed base.
Meantime, tell us about Apple's other big potential bet on augmented reality and what we are expecting to see there.
We don't know that they're going to announce anything at the September event, but they did yesterday. There was some news that they acquired an AR startup. And so that is another very big hint that is going to be the next major product. Mark has been reporting for a while that that's coming in 2020 or later. So it's coming, but it's going to be a few more years.
Mark has reported on these potential AR glasses. We've seen many tech-savvy, tech-enabled glasses come and go.
This is exactly Apple's sweet spot, right? They take something that is already out there, that is a cutting-edge thing. They wait for 3, 4, 5 years, and then when they come out with their version, it actually works and everyone wants to use it. That's the magic of Apple. So a great example was the touch screen, the iPad. Everyone thinks Apple invented the tablet. There were tablets out before, they were just terrible and no one used them.
So we are always hoping for some surprise at these Apple events. What could that surprise be? I mean, what else will we be looking for?
So there's a technology to do with charging Apple devices that's been talked about quite a lot, and so there's something called AirPower, basically, where you don't have to plug in your devices to charge them. And there's been some rumors, which I think is very, very interesting, where instead of just putting it on like a wireless charging mat, putting your phone on a wireless charging mat, there might be a way to, let's say you have the AirPod earphones and they have the little thing that you put them in to charge on, there's a little holder. You might be able to put your iPhone on top of that charging box and the iPhone charges, which would be pretty cool.
All right, maybe it'll be the one more thing. You never know. We will be there, of course. Alistair Barr, Bloomberg Tech Editor, thank you as always for stopping by. Well, shares of Snap fell Thursday when users discovered that its Maps feature had renamed New York City with a religious slur. New York City was labeled with this slur on several different apps used by services like Snapchat, the Weather Channel, and City Bike. That's because Mapbox, the mapping software the company used by those services, says it was the victim of human vandalism. Mapbox says the affected information was fixed within the hour, and the company has a zero-tolerance policy against hate speech and any malicious edits to our maps. Coming up, shares of cloud computing firm Twilio have skyrocketed this year thanks to a sped-up timeline for profitability. We will hear from CEO Jeff Lawson. This is Bloomberg. Since going public in 2016, cloud computing software vendor Twilio has been steadily growing its customer base in what is turning into a crowded industry. The company gives clients like Uber, Airbnb, and WhatsApp the plug-in tools to digitally communicate with customers. In the most recent earnings report, Twilio posted its second ever profitable quarter, beating market expectations with $147.8 million in revenue and rosy projections for the rest of the year. Twilio CEO Jeff Lawson joins us now. So what did you do this quarter to boost profit?
Well, there's nothing in particular we did in this quarter. I think it's been the gradual process of building the company over the last 10 years that focuses on customer success. And we have this really amazing business model, which is that we have the platform approach, which puts developers first. Developers bring Twilio into companies of every shape and size, and they use Twilio to build all sorts of different types of interactions with their customers. And we see this in industries from travel and hospitality and real estate to tech companies, old companies, new companies, everything you can imagine. And then with a usage-based pricing model, it starts out small as those developers are experimenting, and then when they succeed, we succeed because the usage grows and our revenue grows. And so what you see in this platform business model is an efficient way to acquire customers with developers at the lead of that, and then this usage-based pricing model that gives us this great expansion rate inside of all of these customers. The confluence of all that is what you see in the strength in our financial performance.
So WhatsApp is your biggest customer, for example. What do you help them do?
When you sign up for WhatsApp or install WhatsApp on a new phone, they send you that text message to confirm your identity. Twilio is powering that use case.
What steps are you taking to engage with larger corporate clients?
Well, we're seeing software become an important part of every company's strategy. And so where it used to be, you outsourced software, that was not strategic. Well, now every company needs to be good at building software in order to differentiate themselves. And when they do, they hire software developers, and those developers bring in Twilio. Now, if you're a startup, maybe you bring in Twilio and you get started, and that's enough. But when you're an enterprise, of course, there's going to be more complex decision-making going on. So our sales team comes in, follows the lead of those internal developers who get the ball rolling with Twilio. Twilio and often build a prototype with very little friction and maybe put it on their own credit card. But then our sales team will come in and help that initial prototype and that initial idea that those developers are working on turn into reality at scale inside of a bigger enterprise.
Twilio is involved with voter engagement. Talk to us about the tools you're selling to politicians and to lobbyists.
Well, we see use cases in politics. If you think about Twilio and engagement, it's about connecting people together. And so we've been really excited to partner with organizations that are connecting voters with their elected officials is one of the big areas where we've seen a lot of traction. In fact, we announced an initiative a couple of years ago now called Voices for Democracy. And this is part of Twilio.org. And what we said is, look, we have a very polarized world right now. We think what the world needs is people to connect with each other, and in particular, for representative democracy to work, voters need to believe that their elected officials are listening to them, and that is the most important kind of communications that needs to happen, direct constituent to representative communication.
At the same time, we're seeing democracy under threat. We're seeing state actors try to meddle in U.S. elections. How do you make sure that those interactions, if you're the middleman, are secure?
Well, we've been working with some really great organizations like the OpenGov Foundation that is actually bringing a solution for how to talk to constituents straight into the U.S. House of Representatives. And so what they're doing is actually working directly with the elected officials to power their communications, but to use modern channels like SMS. And there's now representatives that are in over 200 of the reps' offices where they say, look, text us if you want to talk to us. Don't try to call us. The phone lines are always busy. We get it. But now you can text us. And their staffers are actually manning that. And so what we do is we focus on working with great organizations that represent official channels of communication and help people to mobilize each other and get out their voices so that their voices are heard by their elected officials.
So what's next for Twilio? What adjacencies exist?
Well, we're really excited, for example, about the newest product that we launched called Twilio Flex. Twilio Flex is an application platform for the contact center. And you might say, why are you building a contact center? I thought you were just a bunch of APIs. Well, one of the neat things about being a platform that developers and companies can use to build just about anything is they show us the unsolved problems of the world. And one of the hot spots we saw appear on our platform in recent years was the fact that some of the largest, most sophisticated contact centers in the world were not getting their problems solved by the legacy stuff that were out there. They were stuck on-prem with solutions they didn't like, and they needed more flexibility than the cloud had offered at that time. And so they said, you know what, with all these APIs, we can go build that ourselves. And so with Twilio Flex, what we announced earlier this year is a contact center for the very largest, most sophisticated contact centers in the world that gives them super flexibility and super scalability and reliability of the cloud.
Now, there's been talk of Twilio as an acquisition target. Salesforce has taken a small stake in your company. We hear rumors about Amazon. Any interest?
We're focused on building a great company. We sit at the intersection of one of the largest industries in the planet, communications, at one of the biggest points of inflection in the 150-year history of this industry, which is a transition from hardware to software. And we're a leader in our category. We created this space, and so we're really excited about building a very big company for the ages.
All right, Twilio CEO and co-founder Jeff Lawson, thank you so much for stopping by. Well, meantime, Microsoft has rolled out a new policy for its subcontractors. Companies that provide temporary workers to the software giant will have to offer 12 weeks of paid parental leave. Those positions include working in the cafeteria, working at the entrance desk. Currently, only 13% of private sector workers in the United States get paid parental leave. Coming up next, the startup Bungalow is trying to change how people find homes to rent. We talked to CEO Andrew Collins and Silicon Valley veteran investor Keith Raboy. Coming up, he just joined the board. This is Bloomberg. WeWork is on track to become Manhattan's largest office tenant. Bloomberg has learned that the co-working giant is in talks to lease about 200,000 square feet at One World Trade Center. That would push WeWork past JPMorgan Chase, which has 5.2 million square feet leased in Manhattan. Bungalow, a new startup that officially launched a week ago, is trying to help renters find a place to live and homeowners fill vacancies. Bungalow has plans to be in 12 major U.S. cities by the end of the year. It secured $64 million in total funding, $14 million in a Series A led by Khosla Ventures, among others. Joining us now, Bungalow CEO and co-founder Andrew Collins and Keith Raboy, managing director of Khosla Ventures, who's also joining the board. And Keith, you've got a lot of experience with real estate. You also have another real estate company called Open Door. So what makes you so excited about this opportunity?
Well, residential real estate is the largest asset class in the United States, and it's basically been unaffected by technology. All areas of the economy other than real estate have actually been reinvented over the last 20 years, and it's time for real estate to adjust to the modern world. So what was exciting about Bungalow is it takes existing inventory that was basically built in the 1940s, 1950s, 1960s, where families and lifestyles were very different, and converts it into the demand that we see today for millennials in urban environments.
Everybody has heard about the people trying to get an apartment. It is so hard. It is such a headache. How does it actually work?
So for us, we really streamline the process. We make it much easier with all of our online listings. We have 3D walkthroughs on our website where people can come, even if they're not viewing it in person, to really walk through. And then we really help individuals with finding other great people to live with as well. And so that's the real bread and butter at Bungalow.
So why isn't this something that Airbnb could do?
Well, Airbnb is not really in the business of permanent housing. Bungalow is in the business of providing permanent places to live. So they're very different. Like Airbnb provides short-term travel, vacation travel, and does it extremely well. But there's a very big difference between providing a place to live for 3 to 5 years and providing a place to live for 3 to 5 days.
So what about the regulatory issues? I mean, obviously Airbnb has run into a lot of regulatory issues. I mean, how do city regulators feel about this?
Well, for us, we're really helping increase the inventory of long-term housing. And so Airbnb has really paved the way with subletting is now explicitly provided for as long as it's greater than 30 days. And our leases are generally 4 to 18 months. Mm-hmm. And on average, our renters are staying with us for close to a year in that initial lease.
So you've been working on this for 18 months. You've
That's
already
correct.
raised $64 million. I mean, that's a lot of money super fast, isn't it?
Well, you mentioned WeWork, so obviously we're like, but real estate's expensive. Real estate works really well when you know what you're doing, when you have an advantage and you can price things accurately. You can build incredibly interesting products and services, but it's not cheap. Every house Open Door buys obviously costs $234,000, and when we do it well, we get more than that back. But fundamentally, real estate can't be done, for $10. It takes real money to change the world.
So Open Door has been called a home flipper. Basically, you buy, I know you don't love that term, you buy homes from homeowners, you fix them up, you turn them around. What sort of trends are you seeing in the real estate market, given what's happening with rates, what's happening with the administration, what's happening with the stock market?
Well, we see, Open Door's live in 13 cities across the United States. We're basically adding 1 new city a month, and next year we'll add probably 2 cities a month. So by the end of next year, we'll be in 50-plus cities. And so we see markets move differently in the United States. San Francisco is a very unique real estate market. The prices here are 4 times the national average. The days on market for a house is 1/4 the national average. New York City is also very different. Overall, I think at the very high end of the market, which really isn't mainstream, there's been a softening of $1 million, several $1 million homes. But in the mainstream part of America, people want places to live. They want to upgrade. They want to get an extra bedroom for their kid. They want to move to a better job. And none of that's changed. So the number of houses being exchanged, which is the primary metric, how many houses are being bought and sold, isn't changing, at least right now.
So where do you think the market is going?
I think the market is still likely to have appreciation across the board, except at the top 1% of houses. But then if you talk about the 83% of houses, as I said, the median home in the United States is worth $234,000. And even 2 distributions away from that is worth $500,000. So as you think about those homes, there's more demand for them. I mean, you see it in urban environments, which is why Bungalow is such an attractive investment, is there's more people that want to live in San Francisco than there are supply of bedrooms, because San Francisco didn't build enough inventory. Seattle went through this and decided to build, but a lot of cities didn't. And if the cities that didn't build over the last decade that have jobs and high-paying jobs have an issue with how do you have all the people that want to live there, it's a little bit like the immigration debate. People should be able to live in any city they want in the United States and pursue the best career they can find for the most compensation and with the best mission that aligns with their values. But they literally can't do that. People cannot move to the Bay Area because there's not enough housing. There's not enough housing in many cities in the United States, and that makes no sense. So things like Bungalow can help fix that. Open Door allows people to flexibly move whenever they want, which is another part of moving to a better job, a better career, a better environment.
Andrew, what about the safety and security question here? I mean, you're matching up roommates. You've got to do background checks, I presume. You know, there are a lot of scary roommate stories out there.
Yeah, absolutely. But there are a lot of scary roommate stories because people can't do those background checks. And so they don't have the same capabilities that we as a company can provide. And so that's one of the things that we think the most strongly about. And as an organization, we can provide that safety and trust that you can't do if you were searching on Craigslist for a roommate on your own.
How can you confidently say that you can do those background checks? I mean, we've seen Uber and even Lyft struggle to do background checks on their own drivers.
I think background checks are one piece of the puzzle. We also fundamentally are doing reference checks, interviews, and helping roommates through that decision process. So that's not just background checks as one criteria of how we check on that.
Keith, do you think Trump and the rates issue is going to affect prices?
Well, obviously there's a connection between real estate values and interest rates. I mean, most people buy, other than the Bay Area, with a mortgage. A mortgage, the effective cost of a mortgage is fundamentally driven by the interest rate. And as interest rates go up, mortgages get more expensive, which means the purchasing power of a homeowner declines. So I think there is a fundamental connection there. That said, everybody who lives in the United States still needs a place to live, and we're not adding enough supply fast enough in many cities, so that causes appreciation where people can afford less, which creates a mismatch, and that nobody knows exactly how that's going to play out.
Andrew, what's the cost of this service? I mean, it's you're paying for convenience, right?
That's correct, but because we're helping individuals find great other individuals to live with and are renting by the room, it's 40 to 50% less than what a studio apartment would cost.
So talk to us then about how you're protecting the data of the people that you're working with.
Sorry.
Well, I mean, there are privacy issues here. I mean, you're getting very personal with these people who are roommates and potential roommates, right?
Absolutely, but we're keeping all of that information and privacy internally to our team, and it's something that we think very thoughtfully about.
All right, Andrew Collins, CEO of Bungalow. Thank you so much. Keith, you're going to stick with us for another roaring block, I'm sure. Keith Raboy of Coastal Ventures, more with him coming up next. And Bloomberg Technology is live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg. It started on August 7th with the words, "I'm considering taking Tesla private at $420, funding secured." Since then, it's been a wild roller coaster of a month for Tesla and CEO Elon Musk, finally scrapping those plans last Friday. Story is not over, though. There's still SEC inquiries. Investor confidence in Musk is in question, and Tesla's weekly output goals are still up in the air. Back with us to discuss, someone who knows Elon Musk, Keith Raboy, Managing Director of Coastal Ventures. Before that, he was an Executive Vice President of PayPal, where he was considered part of the PayPal mafia. You and Elon go way back, Keith, and I always love to get your thoughts on him. What do you make of this whole saga? The U-turn, the tweets, the probably being a little too transparent, if not untruthful.
Well, I think transparency is complicated. Obviously, it's a virtue we all talk about and advise our portfolio companies to be more transparent. Obviously, as a public company, there are some limits on transparency that you have to factor in that you don't as a private company. And we fought this battle actually at PayPal. Peter Thiel was very adamant that we were going to continue to provide economic and metrics transparency to all of our employees, even after an IPO. And the lawyers who were advising the company freaked out. And the investment bankers actually freaked out. And they all tried to convince Peter that we just couldn't do this. Nobody ever did this. And Peter was adamant, as Peter can be. And he's like, we can't run the company if people don't have access to the metrics. So what we finally compromised on is we actually stripped out the last line, which is revenue, and maybe one more line in a spreadsheet. But if anybody who could do math could calculate it. And that eventually appeased the lawyers. So it's hard to preserve transparency as you become a public company. But if you want your employees to be effective in terms of making accurate decisions all the time, you want to be as transparent as possible. Obviously, social media encourages more transparency, and I think a lot of CEOs thrive in a transparent world, and they tweet about their company, they tweet about their customer successes. But there are legal constraints, and when something goes wrong, everybody remembers with hindsight the disadvantages of transparency.
You're a former lawyer.
Yes.
Do you think Elon Musk went too far?
Well,
I can tell.
I think
you think he went too far.
No, I wouldn't say there's asymmetric probably downside to the tweet versus upside. So for me, I look at Tesla and I think it's a very fairly valued company. It's a $51 billion market cap company today, and I wish all my portfolio companies were worth that much. So I think it's not as if this company is being treated unfairly in the public markets. Actually, it's quite well regarded in the public markets.
And yet he seems to not like how it's being treated in the public markets.
Yeah, so that to me, that confuses me a bit, because I could see the case if Tesla was trading at 3 or 4 billion and thinking the world's crazy. Why are all these people irrationally, attacking my company? But at $50-60 billion, it feels like a fairly actually impressive valuation for the company. And so I'd be pretty happy as CEO of a public company that was at $60 billion with their exact current metrics. So I don't totally understand the calculation of the upside versus downside of tweeting in this case.
Well, he's also told several untruths, not the least of which was saying that funding was secured when it is clearly not. He's also, misled in that New York Times interview about how quickly he flew in and out of his brother's wedding, which nobody cares. He should be going to take his kids to see the game of their own set. But why lie about it? Isn't that a problem?
I didn't read the New York Times profile, so...
How could you not have read the New York Times profile?
The New York Times is so biased on technology, I just avoid it. But fundamentally, I do think that obviously funding secured, there are limits to 280 characters and how much nuance you can convey. But once you're a public company CEO, the nuance is going to cut against you, and it's going to be used against you, and you have to calculate that as part of how you compose your tweets.
Funding secured is pretty clear. There's no nuance there.
Well, I mean, we have founders all the time who tell us they have funding secured, when what they really mean is someone might give them a term sheet, or someone has given them a term sheet, but that doesn't mean it's a binding term sheet. I mean, there's a lot of the business world operates this way.
Okay, so do you think he's still the right person to lead this company?
Oh, absolutely. I mean, as I've always said, disruptive changes are generated by and driven by disruptive people, and basically every founder that's created a change the world company has things that are a little bit of a screw loose here and there. I've never met a founder who's been incredibly successful that isn't different than a normal person in some way. So I think you get the upside of seeing things that other people don't see, being willing to do things that other people won't do, that leads to these companies that everybody finds iconoclastic, and actually literally transform the world from Apple on down. And so I don't think you can have a perfectly homogenized CEO and still accomplish things in America.
So does he need to do things differently, though? Does he need to hire number 2? Does he need to stop tweeting so much?
I think
maybe get some sleep.
Sleep is good. So as you know, I think maybe actually my only critique would be I'm an addict for sleep. I believe everybody should get 8 hours sleep and focus on that. There's great books like Why We Sleep. And I think at some point America's going to wake up and realize most health issues in the United States are driven by lack of sleep. And it's just a longitudinal data question of you need to study people over so much time with so many variables. But one day we're going to wake up and realize lack of sleep is worse than smoking a cigarette by far. And it just destroys people's lives. So I would totally focus on the sleep thing, and that'll take care of itself.
Okay, changing gears, I want to talk about Trump, who's been railing on social media, railing on Google. I know you have some controversial thoughts on this. Do you think Trump has a point?
Yeah, I mean, without a doubt, if the government ever sued, an agency, attorney general, government agency ever sued one of these tech companies and was entitled to discovery, they would find very embarrassing emails, threads, internal discussions that would look terrible in the public domain. There are monocultures in these companies. The New York Times did write an expose about Facebook and how some of the best engineers at Facebook are revolting.
So you read that one?
I read the headline. So they showed some diversity in their publication of it. But fundamentally, these companies have very strong ideological views about the world. And they are enforcing those views on their employees, as is played out in some public domain, but a lot of it's in the private. That has clearly had some consequences. So, for example, a talking point. A lot of people think that InfoWars, should be banned from various social platforms. You can debate that forever. The intellectually interesting question is, do the same people who are arguing to get rid of InfoWars, are they willing to suppress all the videos and all the arguments from Palestinians that said 9/11 was a hoax? Usually they're hypocritical about that. They're not willing to pull down the content from Palestinian groups that are saying 9/11 is a hoax, which is at least as false as anything Alex Jones has ever said.
Would you go so far as to say Google search results, their news search results, are biased?
I don't know. I'd like to see the evidence. I think there may be.
Well, there is none.
I know their
which is
search.
the problem.
Well, I definitely know for a fact that their search results against Yelp are biased.
Fair point. Fair point.
The EU has concluded that.
Okay, so that said, these platforms are being misused by state actors to spread misinformation.
Yep.
This is concerning. You know, are you concerned about this? I know in the past you said the United States does the same thing in other countries, and yet we've got an election, a midterm election, that is now weeks away.
So I think spreading propaganda is something state actors have done for centuries. It's like the definition of what a state and what clandestine agencies do. Social platform is like, in my view, it's like publishing a book. So once the printing press was unlocked in the world, people could publish pamphlets. The United States Revolution was driven by pamphlets, mostly anonymous pamphlets, actually. And then the Federalist Papers, in terms of changing the constitutional structure. So this has all been a historical, common thing, and actually quite important. The United States used to drop leaflets in World War II into occupied Nazi territory. We had Radio Free Europe broadcasting intentionally into the Soviet Union and attempting to subvert the communist regime. So this is something that state actors do. So I just find it shocking and hypocritical to say that social media is some new thing.
That said, I'm sure you don't want them to be doing this as an American citizen.
Well,
so
I think
what
the
should these companies do?
I think it's a lot to ask these companies to do more than the government does. Meaning, for example, the United States government, under the Obama administration, officially designated Russia as a friend, not a foe. So asking Google or Facebook or Twitter to conclude that Putin and Russia were a foe, when the president of the United States is calling him his friend, makes no sense whatsoever to hold Google, Facebook, and Twitter to a higher standard than the U.S. government. Now, at some point, the U.S. government's position on Russia has changed and did change based upon facts. And I think asking tech companies to apply the government's perspective is a reasonable thing to do. So it's very obvious that Russia has interests that are different than the United States. Mitt Romney ran for president saying this, and Obama made fun of him. So I think that now that everybody knows, because the facts are in the public domain, the companies should do their best to implement policies and tactics that are designed to limit the influence of foreigners in American elections. That said, the United States government bears the primary responsibility of protecting the American people, not Google, not Facebook, not Twitter.
All right, we could go on for hours about this, but I know you have to go to a meeting. All right, Keith Raboy, Coastal Ventures, as always, great to have you. Great to have you back.
Thank
It's been
you.
a while. Okay. Well, speaking of Trump, President Trump ready to move ahead with China tariffs. Bloomberg has learned the president wants to impose tariffs on $200 billion more in Chinese imports as soon as next week. The U.S. has so far imposed levies on $50 billion worth of Chinese goods, and Beijing has retaliated. This comes as two-way trade talks show little signs of progress. Coming up, Amazon is looking for a home for its second headquarters, but what about the home of its first? We'll take a deep dive into Amazon's impact on Seattle next. This is Bloomberg. Amazon has always been a company grabbing the attention of the United States, but earlier this year it put the nation in a frenzy when it announced it would be taking bids from cities to host its second headquarters, also known as HQ2. Cities like New York, Austin, and other well-established tech sectors would compete to be the new home for Amazon. Even smaller players like Vallejo, California wanted in. It also put a spotlight on Seattle, where Amazon remade a previously out-of-favor neighborhood, South Lake Union, into a home for its swelling workforce. Joining us now to discuss, Bloomberg's Noah Buhire, who wrote this piece in the latest edition of Bloomberg Businessweek. Also with us, our head of global tech, Brad Stone. Noah, I want to start with you. You know, there's a lot of controversy around the idea that Amazon couldn't expand in Seattle. So talk to us about why that didn't happen and what it means for Seattle now.
Well, clearly, we're talking about a company, Amazon, that just has a tremendous amount of ambition. And to make sure that they can deliver on their goals, they are now looking for a second headquarters. And really, they have, in many ways, maxed out what they can do here in Seattle. And I think it's important to note here that when we talk about HQ2, so far Amazon has talked about this as being a co-equal headquarters. So it's not like they're picking up and leaving Seattle, but they certainly are looking for a lot more space. So what we wanted to do in this article was take a look at just how they grew so rapidly here in Seattle and what underpinned that. And really, at its base, it's a tremendous real estate story.
So, Brad, should other cities, though, be concerned about some of the negative impacts?
Well, first of all, I want to tell people to go read Noah's story, which he wrote with our colleague Dina Bass. I mean, it's a story about a remarkable meeting of the minds between two billionaires, Paul Allen, the Microsoft co-founder, who was acquiring real estate in this northern tip of downtown Seattle, when people thought it should be a park, and then Jeff Bezos, who saw an opportunity to create a single Amazon headquarters, and the stress that put on a city of Seattle, which desperately wanted to keep its kind of single-family home creative character, and the tensions that created, and the home prices that shot up as a result. Now, a lot of other places like Boston or Washington, D.C., yes, they'll be looking at the example of Seattle, the home prices, the traffic congestion, the difficult quality of life. But I think the only thing more dangerous than being a part of this growing global tech scene is not being a part of it. And so do you want the problems that come with an Amazon and its growth, or do you want the problems that come with being left out of a company like Amazon?
So, Noah, in Seattle, it's sort of like you throw a stone, you hit someone who works at Amazon or Microsoft. Should Seattle be concerned that HQ2, wherever it is, that city could somehow outshine, that could become the new sort of nucleus of Amazon?
I think that's certainly a concern among the business community here. Now, you have to remember that they've signed a lot of leases and they take up a lot of space in town. That it's not a situation where they can easily pull up, pick up roots and leave town. I mean, Seattle is going to be their home for a long, long time. But there is concern that on the margin, as they grow, as they expand, that perhaps more of that expansion will go on in HQ2.
So, Brad, talk to us about some of the other concerns here for any new city, about Amazon creating, yes, a lot of new jobs, but also a lot of other issues.
Displacement. I mean, there's a great anecdote to Noah's story about the Central District and the African American community there in Seattle and how they've been displaced, largely by gentrification and increasing home prices. So, yeah, a city that is bidding for HQ2, needs to look at the impact of rising housing prices, of traffic congestion, needs to think, smartly about, where they want to put these headquarters, whether the transportation options are there. But I would also, think that what happened in Seattle was a sort of self-fulfilling prophecy. People didn't want the character of the community to change. There was a lot of NIMBYism, as Noah captures in his piece, and it happened. The changes happen anyway, right? Because you can't really get out of the way of these economic changes when a company like Amazon is there growing so quickly. So the community that embraces HQ2 has to be receptive to the changes, has to be receptive to the growth, and be willing to make some of the compromises that come with it, which is less single-family homes, more apartment buildings, and building new affordable housing.
So, Noah, Bernie Sanders, for example, has been on Amazon about warehouse conditions, about wages. How does Amazon plan to address some of these as it creates all of these new jobs?
Well, certainly it's something that they're aware of, and they've been talking with the 20 finalists for HQ2 about. I think Brad's point is key here. Really, what we're talking about is how do cities grow inclusively? When you have such a dynamic industry at the core of your economy, there's a tendency, if you don't make the right public policy changes, if you're unintentional about it, that you can end up in a situation where poorer and middle income people get pushed out and they're replaced by wealthier folks. All
right. Bloomberg's Noah Buchheyer and Brad Stone here. Check it out. Noah's story with Dina Bass in Bloomberg Business Week. Coming up, he's been investing in startups for decades. So what does Mike Maples have to say about the current venture capital landscape? We will check in with him next. This is Bloomberg. Maples has been backing tech startups for more than a decade after moving from Austin, where he got his start, to Silicon Valley. He's made some big bets early on companies like Twitter and Twitch, and then went on to co-found Floodgate, a venture capital firm that specializes in microcap or seed investments in startups. There's where he invested in networks like Lyft, Okta, and more, and he's got some strong opinions about what's happening now and what's coming next. Mike Maples, managing partner and co-founder of Floodgate, joins us now. And you founded Floodgate the same year we launched our show, which was originally called Bloomberg West, and you were on a lot back then, so it's good to have you back. How has the landscape changed from now to then with so much money flooding in? And you've always been focused on the seed stage, but I imagine there it's also become a lot more competitive.
It is, but I think that part of being a good investor is being your best self and not getting too caught up in the activities around you and the fear of missing out. And so we just try to stick to our knitting for the most part. Our funds don't get much bigger. We don't change our strategy. We just kind of try to do what we think we know how to do.
So what is that?
Investing crazy early and risky in the best founders in the world before the world believes in them, and be co-conspirators more than investors, and help them overcome the obstacles and barriers that sometimes a stubborn world will put in front of them.
Now, in a recent piece in Fortune, you wrote, the global startup culture needs to grow up. We don't need disruptors, disintermediaries, programmers, thanks for that, robots that eat jobs, or tech that eats anything at all. How is that shaping your thesis?
Well, so I believe that entrepreneurship is fundamentally an act of love and creation, more than it's an act of disruption. And so when Logan and John started Lyft, they didn't say death to taxis. It was about ride sharing would be awesome. And so
somebody said death to taxis.
Well, not those guys, right? But whenever an entrepreneur pitches me and says I'm going to disrupt something, I'm always like, why do you want to disrupt anybody? And if their advisors are giving them advice to talk that way, they're getting bad advice. And I want to know how an entrepreneur is going to bring abundance to the world. I want to know how they're going to harness the exponential power of microprocessing, computation, and network effects to make people's lives better. I'm not interested in who they're going to harm or disrupt or disintermediate. That's not entrepreneurship. That's sometimes a side effect of creative destruction and things changing, but that's not what the best entrepreneurs are in it for, in my experience.
You've got a lot of thoughts on Bitcoin and crypto. You recently wrote a piece saying, crypto projects remind me of a high-wire circus act. It's like running a 0-to-1 startup and a public company in parallel. The uncertainties are enormous. So are you anti-Bitcoin?
Oh, I'm very pro. So I think that networks are going to replace vertically integrated corporations and organizations throughout society, in business, government, military. You name an organization that's vertically integrated today, I think it'll be a network in the future. And I think that cryptocurrency and some of the future decentralized technologies portend a future where we have networked money and network commodities. And I think that'll be good because it helps us have a return to sound money. And right now, I think that one of the underappreciated issues of our time is how irresponsible the governments of the Western world are in manipulating their currency and just printing money and kicking the can down the road and just, putting Novocaine into the financial system rather than letting the free markets fix some of the sins of the past.
Meantime, you and Anne have been working together a really long time. You mentioned programmers earlier. Why isn't the venture capital industry changing faster? Why is it so hard for venture capital firms, top-tier firms, to find talented women that I know are out there?
Yeah, well, in our defense, right, 2 of our 4 partners are women, so...
you're not one of the ones I'm talking about.
Yeah, but I like to say, Gandhi had this statement, be the change you want to see in the world. And so I think our first job is to just have our own house in order. And then Anne is doing a lot of work with All Raise and trying to help women help each other get ahead in Silicon Valley, but also sort of enfranchise men and helping them as well.
Okay, but what about everybody else? Why is it taking them so long?
Oh, I just think that change takes longer than we'd like, and I think we all try to do the best we can to be part of the solution to that. But I can't. It's hard for me to tell other people how they should do their job and run their business, right? I try the best I can to work with our team to do our job well, and then just try to be a positive force on the rest of it.
So we talked a little bit about what's hot, what's not. What's overhyped?
Well, it's funny. I don't quite look at it that way all the time. So I think that spotting great startups is like spotting a bird in the Galapagos Islands that nobody's ever seen before. And so to me, venture capital is more like bird spotting than trend watching.
Yeah.
And so, you know, people thought social networking was over when Friendster and Tribe and some of these weren't working out, and MySpace, and next thing you know, there's Facebook. And so if Peter Thiel had thought social networking is overhyped, he wouldn't have had, his mind wouldn't have been prepared for the insight to invest in Facebook. So for me, it's one company at a time, one founder at a time.
All right, Mike Maples,
There-
managing.
Yeah,
Go
so
ahead.
maybe one thing, fake growth. So I think some companies are raising too much money relative to the value they create, but that's not one sector.
Is there a bubble that's going to pop quickly?
I don't think so. I think it's going to be more that some companies are going to face their day of reckoning because they've engaged in fake growth and hidden it for a long time.
All right, Mike Maples, Floodgate managing partner and co-founder. Thank you, as always, for coming
Thanks.
back after
Thanks
all
for
these
having me.
years. That does it for this edition of Bloomberg Technology. We'll be back tomorrow. This is Bloomberg.